Okay. Well, good morning, everyone. Good to see everybody. My name is Ray Rothrock. I'm going to chair this wonderful panel. We're going to talk about VC. I'm not sure how it applies to the century scale, since VC funds are really on the order of 10 years at a time, but we'll do our best. With me this morning is Yanev Suissa. He is the founder of SineWave, a venture capital firm based in Washington, D.C. Dafina Toncheva, she's with U.S. Venture Partners in Menlo Park, and Mark Gorenberg with Zetta Partners in San Francisco. So I'll let each of you sort of do your advertisement about your fund, what your fund thesis is, and just why are you here. Yanev,
sure, so I'll start. So I'm Yanev, nice to meet you. SineWave is a new firm based in Washington, D.C. A sine wave is a graph that looks like this. So it's a hill connected to a valley. So Capitol Hill in Silicon Valley. It's also a roller coaster ride, so it works that way too. And what we do is we always invest in kind of early stage companies in a syndicate with one of the top firms in the valley, in companies where the public sector could be a sales vertical or where you need to figure out the public sector. So our thesis is that public and private overlap more and more, and so we look at startups, commercial startups only, so we don't do anything focused on the government, where we could help unlock that potential for those companies to make a bit of a difference. So that's what we do.
How many people are you? And
SineWave's about 10 people. We have about 60 million under management, a little over 60 million. And
Great.
We're in our first fund now.
Great, thank you. Dafina.
First of all, good morning. Thank you for having me here. It's a pleasure. Thank you, Ray, for inviting me and including me on this panel. My name is Dafina. I'm one of 6 partners at U.S. Venture Partners. U.S. VP is on the other end of the spectrum relative to Yanev's fund. We're a firm with very long history in the Valley. The firm is as old as I am, actually. And I think that's a great asset and a great benefit. The firm has built an institutional DNA around early stage investing. It has seen a lot of cycles. We've learned from those cycles. We're on our 11th fund. 10 of our funds have been positive returners for our investors. We invest in 4 sectors: enterprise, software, security, consumer, and healthcare and healthcare IT.
Great. Mark. Zetta.
So Ray, thank you, of course, for inviting us here. We really appreciate it. I've been in venture now for 27 years. In 2013, and huge believer in focused funds. And it became clear by 2013 that software itself had become commodity. It was really the data and algorithms added to software, giving the software learning value that was where the entire industry was going. So in 2013, we started a fund. We called it Zetta after the Zettabyte. We only invest in what we call artificial intelligence for business. We have 185 million under management. We invest typically after the angels and before the Series A. And we've made 21 investments. 2 of those companies have been acquired by Google, and 2 of them now have become unicorns.
Thank you, Mark. So this is a pretty interesting crew. We've got a new fund trying to connect the hill with the valley. We've got a staid, fantastic firm in the valley who's got a new partner that is younger than the fund is. And we've got Mark, who's watched software develop. So if you could, this is all about where the future, where the investment is, and so forth. We'll take it in reverse order.
Sounds great to me.
Yeah. Mark, so you touched on some of your investment thesis. Could you give some examples of some of those companies and what problems they're trying to attack?
Sure. So as companies in the last decade became cloud-based, they started to generate a lot of data, exhaust data through their engagement. And that data then allowed them to create effectively what I would call a virtuous loop of data that then goes to algorithms, that cleans the data, that then cycles back through algorithms. And that can be applied, that's being applied now to every line of business. So for example, a company that Dafina and I are both working together on the board is a company here locally called Inside Sales. They now have 100 billion records. They're a sales acceleration platform for sales reps to use in their jobs. They act effectively as their assistant. They have 100 billion records of data. They're adding 5 billion a month. And by use of that data, they can figure out which of your leads are going to close, which sales reps should match up to leads to have the best chance to close them, what time of day to contact people, what type of messaging to use, and whether to email or call. The customers don't really understand the Neurolytics platform underneath. but they're getting 15 to 30% improvement in sales conversions, and that's what their customers care about. And it's all about the crowdsourcing of all this data across all these customers. So that's just one example.
Wow, that's a good example. Dafina, tell us about cybersecurity. You've been active there for a long time.
Yeah, so I got hired into Venture by Ray, and at the time, 9 years ago now, there was only a handful of VCs investing in security. It was considered an esoteric niche kind of market with few people having any interest in it. And today, everybody's talking about cybersecurity, and every venture firm is marketing cybersecurity as a major area of focus. Almost every firm, Mark's firm, doesn't invest in security necessarily. And I think the reason why this shift has happened over the last 10 years is because of the impact. I mean, you know, just to bring it home, 50% of the audience has been impacted by the Equifax hack that was announced just a few weeks ago. This morning, CNN announced that data suggests that North Korean hackers have stolen US military data from the Pentagon on planes, on tactics, strategies on how to take out the regime. So when we think about security, cybersecurity and its impact, it's economically devastating. 100 billion was lost last year just from hacks, from breaches. It's politically devastating, can be, and it's a matter of also national security these days, national physical security as well. So yes, everybody's paying attention to security, and I'm really happy to be one of the first investors there paying attention to that space. As I look forward into the future, what kind of scares me is that you know, so far we've been talking about hacking software and servers and stealing, you know, financial data, stealing maybe government data. But I was at the Black Hat, which is the security conference kind of the year, every year for the last 20 years. And, you know, they just demonstrated how they can hack a pacemaker. So, you know, let's think about that. They showed how they can hack an autonomous vehicle. So while you're driving your car, the car doesn't go where you want it to go, or the car just crashes. How about this? I just saw the first virus, software virus, being carried by DNA. So University of Washington scientists took the DNA of a cell and used that DNA as storage for a virus. Then they had a computer sequence the DNA of that cell, and by sequencing it, the computer executed the instructions of the virus and was hacked. Now, sequencing today is too expensive, so we don't think of that being a problem tomorrow. But, you know, we're talking about the next century. I don't know about the next century, but certainly it's going to be a problem 10 years from now. So when we think about security and we think about all these new devices we're carrying, you know, smart devices, starting with the pacemakers that I was talking about, and, you know, going to our watches, our phones, all the little sensors we're installing everywhere, all of that data generation will have to be protected somehow. So I think there is a lot of room for security innovation, and I'm happy to be part of the community that's trying to solve the problems.
Wow, so any pacemakers out there, you should maybe recheck your software. Wow, that's new news to me. I don't know who went first, the real world or Homeland, right? I mean, Homeland had
Exactly.
that hack. Yanev, you live in the shadow of Capitol Hill. You operate near Capitol Hill in the White House.
I think they're kind of in the shadow right now.
Okay,
but,
fine,
yeah,
fine.
but,
That works.
Yeah, so it was an
So
interesting.
connected. Yeah.
It was an interesting connection. Maybe not the sectors I wanted to talk about, which I'll get to. But so then people always say, so what does the public sector have to do with commercial tech? So think about whose job it is to regulate health, and when people are hacking your pacemaker, or people are, you know, putting viruses in your DNA or whatnot, right? And then imagine the people in Washington trying to get their head around that, and think about what you as a startup have to kind of figure out and deal with in order to be successful in the long term. So the areas that I think are really interesting is and this kind of ties a little bit to what Mark was talking about also, is edge computing, which kind of ties also to this concept of serverless computing, which a lot of people are talking about. So IoT, Internet of Things, is something everybody hears about, really in industrial and manufacturing, in critical systems, which Dafina mentioned a little bit from a cyber perspective. All this processing just on your cell phones and your regular consumer practice, everything is being processed on the edge. So instead of going back to the brain and all the way back out, right? There's enough compute power and ability, and we're seeing this get built and these networks and systems be built to be able to process that at the edge. And that has really interesting implications for all kind of industries. It also brings industrial manufacturing, these sectors that VCs don't traditionally have relationships at or understand, to the forefront, right? And those guys have lots of money trying to figure this out. So you've got a lot of people who don't know what they're doing with lots of money, and a lot of VCs with great ideas who don't know how to access them, which is some of what we do in terms of our ecosystem connecting at SineWave. The other areas that's interesting that I think specifically ties to what Dafina said in particular is, it's funny, my first week at NEA, someone handed me I was at NEA before I started SineWave, which was one of the other big venture funds. Someone handed me an insurance technology company, and I was like, I don't care how exciting it is, I'm not working on insurance, right? And so, and it turns out now insurance is kind of one of the hottest areas in VC, and for good reason. When you think about cyber and privacy, take Target, right? So it's not there now, right? The Target hack was a while back, everyone knows it from the press. Someone's going to be held responsible for this, right? Is it going to be Target? Is it going to be you for not protecting yourself? Is it going to be the government for making sure that you're protected? And that's all also an intersection of public and private, but that's all coming down the road and is really important. We will have regulation as to how you as a company need to protect your clients and customers. And similarly, you think about, look at the world today with the hurricanes and things of that nature. You have to think about agriculture and the impact of climate change and new disasters and what happens now with those industries. Technology plays an interesting role in being able to understand, being able to predict, understand risk, and kind of create solutions to those problems.
Wow. Well, one of the things that none of you mentioned was Bitcoin and the coin offerings and all that's going. In fact, today's Fortune blog was all about it. Any thoughts about how the impact there? Should we all go run out and buy Bitcoins? And by the way, if you'd have bought $100 worth of Bitcoins, I'm forgetting the time frame, it doesn't matter, you'd have $12 million today. That was in this article in Fortune magazine this morning. So Bitcoins, what's the impact of cyber currency or digital currency?
Has anybody made a Bitcoin investment?
I have not.
No. Why not?
Well, I'll take a stab
Yeah,
at
take
it.
a stab.
So I think, Bitcoin, I would separate two parts of it, which I think get confused in the press. One is Bitcoin and one is blockchain. So blockchain is kind of the process of how a system like a cryptocurrency operates, right? So the inability to counterfeit, a ledger system, not needing to trust the other party because it's kind of built in. The blockchain concept applies to multiple sectors and multiple different solutions, and that I think is interesting. On cryptocurrency, when it comes to Bitcoin, I think we're really, really early, no matter what anyone says. And you will have tons of, just like when we moved to the gold standard, tons of people will jump in. It's the same kind of thing, right? Because the currency wasn't working the way people wanted, right? So people will jump in and people will speculate and people will make tons of money and people will lose tons of money. But ultimately, you're not talking about, just as this starts to develop and get bigger, which it is, this is currency, right? That's the realm of government, no matter what you say. And this concept of the Bitcoin evangelists that we're independent of government and independent of the world, I've got news for you. You're not at all. And all it means is that 500 different governments are all going to try to regulate you in different ways. And by the way, good luck with that, because I hardly understand Bitcoin and I get it. So I think it's a very early stage, and I also think it's starting to change because the trust element of Bitcoin is starting to change. Because you see, part of Bitcoin is that a certain percentage of you rely on the fact that, let's say 40%, I forgot what the number is, 40% of people aren't going to lie about it. They're all disparate, they're not all connected, they're not going to lie. But when China starts mining Bitcoins and they own 40% of various pots, then people can start to make not necessarily honest decisions, which starts to impact the whole platform.
Yanev, you brought up you used the word trust in there, as I've, over the last 30 years, done investments and looked at things, it seems that our technology is pushing our level of trust some. We have the whole cyber world, I mean, the Equifax, even though their net worth is now half of what it was, the company's net worth, but do we trust them? But also big data.
Yeah.
I mean, I make a decision, I do something, and then someone puts a report in my face and says, well, no, you can't do that because the last 3 times you did, it said you would, how do we reconcile this trust element in technology? And what's the startup world think about that?
So 2 answers to that question. One is all of our startups get data rights, and that's very difficult for big companies to do because they have other competitors. So typically startups are trusted if they anonymize the data, if they can show that they can secure it, to be able to have access to that data to make those network effects. And that is actually given an advantage to startups in this AI area over big companies that are trying to do consortiums with partners that actually compete with them in the market. But to another side to your question, Ray, I think you're absolutely correct in that AI investing for business or enterprise or society is not being held back by technology. It's held back by what we would call the risks society is willing to take. And we've seen this evolution. I would argue that the modern AI era really started around 2005, and it started with consumer, which is that in 2000, we hit this tipping point where we finally had more digital data than analog data, and by 2005, Google and Amazon had figured out how to crowdsource it and could do simple things like do better search, could do better recommendations. The risk to society was close to 0 in terms of doing that. I mean, you didn't really care if it didn't recommend the right book to you, for example. Yeah. Now we've entered into the era of the enterprise, so people are willing to trust it if it's incremental in terms of their revenue increases or their cost savings, like in marketing and sales. And now we're seeing the investments that we're doing are in areas where they're going another level of trust. For example, language translation, or we're doing insurance assessment, or we're doing even production line, things that human beings do but software didn't do before. But this next jump to healthcare and to health of the planet, that's where society has to catch up. So I'll give you an example. I met with 3 MIT entrepreneurs who have enough training data now that they can figure out 6 months, they can predict 6 months in advance, very accurately, whether you'll have kidney failure. And they've gone to hospitals with this. And hospitals will not use it because they're afraid to let a computer basically predict a course of action on this. Right. They're not even allowing doctors to see the information because they think it'll bias them. But what they are willing to do is they are willing to use it to prioritize the order that people see doctors. So this is now, so we're catching up to where that will be. And we've got some, as society figures out this risk level, that's when I think we'll be able to go after these very complicated multidiscipline problems that are going to really be helpful to society.
Boy, that is fascinating.
I heard, in just 30 seconds, I heard an analogy on CNBC that really resonated with me. An analyst interviewed in the morning was saying that he thought that the data companies are the new big oil, and data is the new oil. So the way the oil companies back in the day made a lot of money before regulations, before competition, before government intervention, and they still make a lot of money, true, but they're highly regulated, and there's a lot of scrutiny on them.
Yes.
A lot of scrutiny on them. The same is going to happen with Google, Facebook, Amazon, because they are holding the oil of the digital age.
Their
So
reservoirs are the data that they contain and how they use it.
And to Mark's point about healthcare, we deal with that on a regular basis because 25% of our portfolio is healthcare and healthcare IT companies. We have a company called HeartFlow, which is trying to replace the highly invasive angiogram. For those of you who are not familiar, angiogram is a diagnostic test that checks for coronary heart disease. It's highly invasive. Basically, a catheter is put into the femoral artery, and it's threaded all the way to the heart. So it is dangerous. It's invasive. It's very, very costly. HeartFlow just looks at the CT scan of the heart, and in 2 hours can predict with 95% accuracy whether there is a coronary heart disease or not. Now the diagnostic that exists today, the angiogram, is about 60% accurate. And still, HeartFlow has to go justify with the FDA why it should be treated the same as angiogram, and why insurance companies should cover it, even though it's about 100 times cheaper. And it's done in 2 hours, so it's also 100 times faster. And we're still fighting that battle to save lives and improve lives through data.
Wow, that's amazing. Dafina.
I'll take 30 seconds.
That's okay. We got time.
I think we'll still talk about security. I guarantee you that.
Yeah.
Security will still be a big problem and a big issue top of mind for everybody. I think we'll be talking about artificial intelligence in different ways. I think we'll be talking about robots. I think we'll be talking about automation, complete automation. I think we'll be talking about jobs that are created by automation and by artificial intelligence. And I think we'll be talking about the intersection of biology and computer science. We'll be talking about DNA as storage. We'll be talking about synthetic biology, which is the creation of compounds thanks to analysis of huge amounts of data, compounds that make us better humans, that improve our planet, that improve all the living things on our planet as well. So that's kind of the future that I'm excited about.
Wow. Yanev.
I come from Washington, so I'm always worried about things. I think
Don't be a downer.
I won't be a downer, but I do think that technology inherently decentralizes, personalizes the lives of individuals, businesses, et cetera. It distributes it. It also distributes responsibility. So with all pros come cons, right? I actually think technology will decentralize government. I think it'll displace and replace government, not just ours, but around the world. And I think the who owns what and who trusts what and who's responsible for what and who's controlling what will be in the hands of the cloud, so to speak, right? We're going to see some of the externalities of that, both positive and negative, start to come to roost. So we're going to have to figure it out. And I think it's going to be an interesting change, empowered as Facebook is now the big marketplace of all communication, and as health companies are literally in your body, right? Can tell you what's in your body, right? It's happening already, little robot, as Dafina mentioned. Who's responsible, where the morality falls, it all becomes a really interesting opportunity and question. So we'll see how it goes.
So I have this vision of Oz, the great wizard, somebody. I don't know who that'll be back there. Yes, sir.
This is a fascinating conversation. In my world of biomedicine, I'm going to be saying the same thing tomorrow, that the science is really there and the barriers are trust, and how do you get people to engage in change? I'd love to hear your guys' thoughts on some positive sort of actions that you see as building that trust. So rather than letting us filter ourselves against the new technology as it comes out and figuring out security holes because we've been hacked, how do you think about actively building that sort of community and trust, the opportunity space that you talk about?
Anybody want to take a shot at that?
Well, to me, one obvious one is the new generation. I think that the younger generation that has been brought up with Facebook, with Instagram, with Google, with Amazon, which trusts technology and lives its everyday life on a daily basis using technology, is more trusting. And I'll tell you, we look at companies, for example, that improve the life of blue-collar workers, right? You give them a smartphone and they just, truck drivers can do their logistics easier, or handyman. And I'm asking the entrepreneur, these guys don't have education. They don't even have high school education. Why do you think they'll use this? He's like, they might not have high school education, but they were born and raised with an iPhone next to them. These are 20-something-year-old people that might not have education. They're two separate things. They're still very technologically savvy. And I think that's true for every single area. I think that the doctors of the future, the doctors that are 20 years old, 25, 30 years old, they expect to use technology. And I think it will start there. They will rebel against the authority They will be the first to adopt, and then the authority will reluctantly follow, which is what's happening in enterprise companies. If you see in enterprise companies, the IT departments, which are the governance, they say no all the time. Yet you bring your own phone to your office, you do whatever, you use whatever software you want, and then reluctantly they say, okay, I guess we'll use Box now, I guess we'll use this software, that software, and now we'll just have to put some controls around it. So I think it starts, it's a ground, what is it called, roots approach?
Yeah, groundswell. Yeah,
Grassroots approach, thank you, grassroots approach, that will bring forward this sea of change, in my opinion.
Yeah, by definition, success leads to trust. I mean, as things are implemented and people are successfully using them and getting positive results, they tend to look towards the positive things they're seeing, but it's that initial thing for use. So for example, we're starting to see imaging in terms of, when you're doing things like ultrasounds. Before you had to only use very specialists to get the best ultrasounds, but now with the technology being used, you're able to open that up a little bit. People are seeing the value of that. We're seeing simple applications in things like marketing spend, where people before wouldn't trust a machine learning algorithm to do that, but now they see the results of that, how much revenue they're gaining, so they're willing to do that. And our latest investment was in a company that is looking at the energy grid. So they have modeled the energy grid in detail, and they do the best predictive models, and they can look ahead the next day and decrease the amount of energy cost used by the utilities by 2%, and decrease carbon dioxide by 1%.
Great.
So
Can I say one
Cool.
sentence?
One sentence.
So I think people trust things until they realize that they shouldn't have, and then they expect someone to fix it. And I don't think we know who plays a role in each
Speaking
of those
like a
parts.
government
Very
official.
So, trust. Why should we trust VC firms? And we were talking this morning about data and how you can visualize data. Are you going to see new ways where we'll have transparency for VC firms, and we'll have maybe 3 indicators of your trust level and your ethics of your firm?
Wow.
Well, I think that already
Do we have another half
exists.
hour? Can we talk about that?
Well, so I think
Yanev,
that
go.
already exists, actually, in that, reputation, what you know about us. I think it probably ties into some of the harassment things that have been happening. right?
Visually, though.
Pictorially?
Well, so ironically, I say this to my team, VC is inherently, I use a word that I probably shouldn't say, a mess. Because it's not as programmatic and as a science as people think it is. So as much as you hope there's data, we don't really, a lot of what we do is a guessing game at the end of the day. We know how to get rid of the not
Noise.
great stuff.
Right.
But who actually wins is all a guessing game, and all of the data you apply to it, it's like guessing, right? So you can do everything you can to help a company succeed, and of course, and that's important, getting the horse across the finish line once you bet on it. And I also think reputation and is out there, so people know what you've done or haven't done, and entrepreneurs talk. But transparency, just to pick up on that word in particular, a lot of people talk about transparency in DC all the time, and just all these companies trying to be transparent and be transparent. And one thing VCs are really good at, and why I think there's a trust element to venture, is when we're negotiating to get into a deal, it's one thing. But once we're in, our incentives are 100% aligned with you, right? We want you to succeed in every way humanly possible, because that's success for us, right? Until then, you can question and you ask others. But once we're aligned, we're there. With transparency, it's not so much the case, right? Incentives are still misaligned, right? I have every incentive to say I'm going to be transparent and 0 incentive to be transparent, right? And when you think about that, what ends up winning at the end of the day when you're a business or a company? Usually the non-transparency. But I bet Dafina has something.
Well, I think we're over here by a couple
I
of
think-
minutes. We've got to wrap it up. Thank you very much for those questions. I think I want to thank the panel for coming out today. We'll be hanging around. We've got some more questions.
Thank you.
Thank you very much.